sterling yen. Sorry, sterling yen. Right, it's of course the same situation like with the dollar yen because of yields, and we're looking at this is the current for our chart for today. You're looking at, you have already done a level 3 and we did a 4. We're attacking the neckline. We did investigate the momentum on the daily and on the weekly, and it turns out that we're going to 168 and 169. I talked about this in detail yesterday and even the day before yesterday. So over here we're now concerned with this label. There is an internal 1-2, there is a 1-2, there is all this is still a wave 3. Maybe there's going to be a wave 4 next week. We buy into this, we're going to get a 5, we're going to get a 6, we're going to get a 7. We know we're going to get an 8 and a 9. We know we're going to get all of these because of the positive momentum plot on the 4 hours and the 1 hour and all the time frames. So we cannot expect to have a 4C at this neckline. This is because we are at a neckline and this is a level 3. You should actually expect rejection unless there is something very strong fundamentally hitting the market. The momentum cycles will not reverse, and therefore we cannot expect to get any 4C at that point. The market will move higher all the way to 169, we believe, before it retracts down to test that neckline. We're concerned with this breakout. If you want to trade sterling yen, even today, we would of course prefer, if you're long, we just hold. If you want to get into the market, even today, we're concerned with this breakout here. You would want to focus on this breakout here. This is what we have segregated on the 15-minute chart, just this breakout. We buy flush into this breakout. We have the stop just below the pink candle of that breakout. There is this support pattern here. We have the stop, not the stop, the hedge just below that support pattern. So if this market breaks below this, over here you're seeing some kind of a tweezer formation. So just focus very strongly on it. This tweezer formation, we have a hedge below it. Suppose that for any reason the market decides to tank now, just for anything fundamentally goes wrong, we have sell stops just below that level. Right, now we all know how this works. Now below that level, I believe, is something like 163.8. It's not showing here, but we have now studied it almost by heart. Okay, so we open hedges at 163.8, takes us to 162. Of course, you open the hedges here. There's a bounce at level 1, but we take that level 1, we go to the next neckline, 162.5. We close out the shorts, alright, and the market goes up again with the longs that we're carrying, should definitely, because of the positive momentum we're seeing, and we close out the longs at the same hit. This is how to get out of a reversing position if the market decides to reverse on us. Right now, all we can do is just buy the 15-minute pivot level. Today we will not get seen, but probably on Monday, with the hedge at 163.8. Let's take a look at the actual trading. Let's take a look first at the trade management. It's showing you on that 15-minute chart just what we have been actually reiterating. Okay, so the pivot level on this chart comes in at 164.5. We've seen early Asian morning, just very early Asian morning. Remember that saying, the early bird catches the worm. It's really true. So just one candle, that's it, struck that 164.55. We would have bought that, and we go out at R1 or 50% between R1 and R2. The current market is, I believe, 165.4. At this point it was at 165.3. If we're fortunate enough to have already filled in that pivot level, we hold across the weekend. We are now able to have a stop loss at entry, alright, and of course we hold across the weekend. This is a positive swap anyway, and if we get to see these levels 168 or 169, we will not close orders or will not close the position until we have negative momentum on the daily chart, which is still a long reach off. We're looking at these labels now. If we are not yet in the market, you're seeing a 1 and a 2. Apparently this is a 3, it's an ending diagonal, there's a breakout of course. This is the same breakout we're seeing on the 4 hours. This is what we are investigating. Alright, you're looking at, this is what you're seeing here. So this is a very strong breakout. It's very this is what we are investigating here, this breakout. Okay, so it's a breakout, and if we get to see any retractions in it by Monday, it's an excellent buy. We have to monitor it to see these retractions. So because it's a breakout, of course it's labeled into a 1, 2 and a 3, and any retractions would bounce at the top of 1 usually. Best entry 164.8 if we get to see that on Monday. Possible to spike into that internal level 1, 164.66. Remember, we have a hedge at 163.8. It's not showing here in the first place, but I know it's at 163.8. Alright, so let's just check the live market. We're beginning to get that correction, and now even if we get it towards the end of the day, if we get to that level, we're at 165.10. If we get to that level, 164.66, it's an absolute buy. 164.8 is also an absolute buy. The hedge comes in at 162, so 163.8. At that point here, 163.8. Of course, below level 4 altogether, below the neckline there is